So I think when you hear Lloyd Blankfein say that's a bullish sign, we need to define bullish. And when we hear Cramer say the bear market's over, we need to define what's on the other side of that. So I think if you're bullish, what does that mean today? Bullish for the past 10 years has meant an annualized return of 16.5%. Bullish for the past 3 years has meant up 30, up 18, up 27. I could say I'm bullish in that I don't think the market's going to go down 20%. I could say I'm bullish in that maybe we're kind of flat, maybe we're up 5%. Is that bullish? If you consider that bullish, then sure, that makes sense to me. When we talk about the crescendo, right, the retesting the lows, Goldman had an interesting piece out over the weekend where they said U.S. households have $15 trillion of cash right now. And so we need to think about all that cash, not only on individual household levels, but also at corporations. And I think that acts as a floor and as a foundation that ultimately supports the market. But then we get into like, what's bullish? I'm unenthusiastic. Right? I'm fully invested, but I'm cautiously fully invested. I'm unenthusiastically fully invested because I don't think that we're going to have the kinds of returns that we did in the past. And as I've been saying for the last year and a half, there's no easy money to be made anymore. So if you're fully invested, you can't just buy everything. It's not a rising tide's going to raise all ships. You're not going to have your easy 100% returns. You're going to need to be really careful with that. What you can't own anymore is you can't own unprofitable companies. You can't own super high valuation companies. You can't own companies that don't have the ability to increase prices because we're in a hard environment. So define bullish. You could be bullish, but it's not the rosy heyday.
I don't know. I mean, look, maybe the
years.
Resiliency of the market in and of itself is bullish. Maybe earnings are going to be better than expected. And that could be bullish because it seems like everybody wants to suggest that earnings are going to be a disappointment. Weiss threw out already. It's just a matter of time before the negative revisions come in, et cetera. And then there is the other point that I heard Mohamed El-Arian make this morning on Squawk Box. It's like, all right, what are you going to do? You're going to go to cash, get a negative real return. Where else are you going to put your money? Somewhere else? Overseas, where there's even more risk than maybe here. So that continues to flood the U.S. market with cash. And that is in and of itself, if money is coming in, perhaps a bullish sign.
And again, what's bullish? Is it up 5%? Is it just not down? Then great. So Steve said earnings are going to be ugly, but I would say define ugly. We started the year off saying earnings expectations should be up 9% on the year. What if earnings end up being up 3% or 4%? That's worse than expectations, but guess what? It's still positive. And in light of all that's gone on from a geopolitical perspective, from a tightening perspective, I would consider that pretty good. So, it's funny, I actually reflected on the year-end letter that I wrote. And the year-end letter that I wrote to clients said, look, we have a pile of good stuff coming up. We have a pile of bad stuff coming up. It's going to be a hard year. 3 months later, I'm in the exact same position that I was in 3 months ago, which is it's going to be a hard year. Maybe we're up a little. Maybe we're down a little. Not super bearish, but I'm not enthusiastically bullish.